Another week of losses for the S&P. Can it hold and avoid a rollover? We look at the midweek review for May 23rd, 2019. This is Agustin Hernandez. Before we begin, the opinions voiced in this material are for general information only. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Technical analysis is the forecasting of future financial price movements based on the examination of past price movements and cannot predict the future. Technical charts referenced are subjective. No strategy can ensure success or protect against loss. International markets involve special risks such as currency fluctuation and political instability. These risks are often heightened for investments in emerging markets. International investing may not be suitable for all investors. Investing involves risk, including loss of principal. Sector investing will be subject to greater volatility than investing more broadly across many sectors and companies. On this week's agenda, we review the S&P weekly chart and see what it is telling us. The Nasdaq has been hit hard. Once the strongest of the big three, is it in danger of beginning a new slide down? We look at the NYSE Advance decline line. Is it telling us something different? We look at the correlation of the NYSE AD line and the S&P 500. And finally, what does this mean? This week we will go over the weekly charts. We first start off with the S&P 500. The moving average we will use is the 10-week moving average, which is equivalent to the 50-day, and the 40-week moving average, which is also equivalent to its 200-day moving average. Now, the previous week we saw an intermediate term low of 2801.43. Since then, the S&P has bounced around, but for now has held above that recent bottom. It looks as this may be its first line of support. Price is still currently above its 40-week moving average, but it is currently below its quicker 10-week line. Now looking at the MACD, we see it is still in green, but positive momentum has slowed down ever since the S&P hit an all-time high close to a month ago. So not looking great, but at least the bars are still in green and the S&P price chart is still above its 40-week line. Of the big three of the U.S. stock indices, the Nasdaq was the strongest. But with fears of a trade war lasting longer, such sectors such as semiconductors have been hit the hardest, and that has impacted this index. Like the S&P, this index peaked about a month ago, and price has since fallen below its 10-week line. As of close Thursday, the 23rd, the Nasdaq has dropped close to 7% since its peak. Now the key here is that it has for now stayed above its 40-week line. And as we can see below, the MACD is still in green, but barely. That is something to keep an eye on. Now there can be negative momentum in weekly charts without the index rolling over, but price needs to stay at or near its 40-week line during that time. For now, let's keep an eye on this index. Last week we introduced the AD line. Just as a refresher, the AD line is a breadth indicator based on net advances, which is the number of advancing stocks less the number of declining stocks. So for technical traders, we look at this line as it shows us if stocks are advancing or declining. So what does this chart tell us? For now, this index has held at its 10-week moving average. That is good. Remember, both the Nasdaq and the S&P price action is currently below their respective 10-week line. In fact, if we look back in September 2018, we see the AD line at the 10-week line, but notice its MACD line was in orange, which shows negative momentum at that time. Currently, the MACD line is still in green. So for now, it seems as of now, this index is stronger than it was in September of 2018. Now, as I have stated before, traders use the NYSE AD line as a gauge of health of the overall stock market. And the S&P is a broad market index, so let's see how they correlate. This chart looks messy, so let's go through each indicator. The black and white bars is the weekly price action of the S&P. The green-red bars represent the NYSE AD line. And finally, the 40-week moving average is the black solid line. So, as we can see, for the most part, the S&P and the AD line are in unison. As more stocks advance, we see the S&P go higher. The one exception was in September 2018 when the S&P price was going up and the AD line had already peaked. Since then, we first see the AD line break below its 40-week line, and then we see the S&P price begin its fall. Since then, we see both the AD line and the S&P move back above, and they pretty much move cohesively both up and down. So for now, we see the AD line above its 40-week line and moving in unison with price, which is healthy. We would need to be concerned if the AD line fell below its 40-week line. That would not be a sign of a healthy U.S. total stock market. What does this mean? For now, the S&P is barely holding on to a stage 1 rally, but it is holding. With the AD line above its 40-week line, for now, we are in that cautious optimistic stage. In 2018, during the first pullback in January, the AD line did hold above its 40-week line, and it turned out to be just a pullback for the S&P, but it did weaken the rally. Eventually, the AD line fell below its 40-week line in October, and that was followed by the major drawdown we felt from October to late December. For now, expect choppiness as the S&P, Nasdaq, and Dow try and hold on to a stage 1 rally status. We will need to keep an eye on the price and the 40-week moving average, where the momentum goes negative, and finally pay attention to the AD line. As said in previous videos, this is a volatile stage, as these indices attempt to enter a long-term stage 2 bullish run. Let's see if these major indices can hold on over the next several weeks. Thank you for viewing my video. Please like and subscribe to my channel for future videos. Also follow me on Twitter at my handle HRSNYC.